Well, the Australian dollar fell at first, had a think for half an hour and then fell some more and ended up at 64.3 US cents without a fight. Lower on the day because the statement with the rate hike read a bit like that may have been the last one. Now, last month the Governor said further tightening of monetary policy may be required. Today she said whether further tightening of monetary policy is required will depend on the data. Now, you and I might think that's not much different, but this is the mysterious art of Reserve Bank semiotics. So the market odds of another rate hike by February dropped from 62% to 38%. As for whether the banks will pass it on, well, of course they will. Their cost of funds actually went up 2 weeks ago when the September quarter inflation rate came out, not today. What the banks pay for most of their money is the bank bill swap rate, not the cash rate, which is really just the flag that the RBA waves to confirm what everybody already knew. The share market ended up rising, but it had a whoops-a-daisy moment at first because the computerised trading algorithms must have had some kind of conniption. It closed slightly lower on the day because the banks all fell, maybe because more of their customers will go broke now, but actually more likely it was a general fall by markets across Asia, much bigger than here in fact, despite a rise in New York last night. And finally, not much happened on commodity markets. Oil, iron ore and copper up a bit, gold down. And that's finance.